Welcome to my take on the market. A quick assessment of the market. We just finished the first quarter, and we were told by the jibber jabbers on the TV shows that this was the best quarter since 1988. Well, let's put it in perspective. It was the best quarter because we had short covering. That's right. Remember, the market dropped 20% from October 5th down to December 24th. Then from December 26th, it went back up 20% on the fake narrative that we were going to be cutting a deal with China every day. That's all they could come out and put that fake narrative out. They were going to have a deal with China, deal with China, deal with China. Well, there's not going to be a deal with China. So the institutions bought into the rumor like you always do. And then when the fact comes out that there is not going to be a deal because China will never agree to a penalty if they get caught stealing our technology. That's why the market rallied. It was simple, short covering rally. The rates need to be cut. The reason, now go back, in the last 15 months, the market gained, net gained, only 40 points. That means since 2008, the market has gone up 350%, then stopped dead in the last 15 months. Because it's over with rate hikes. We've been enjoying zero interest rates. We've been enjoying stock buybacks. We've been enjoying QE. It's over. Trump has now sent out Larry Kudlow to tell us that he's going to drop rates by 50 points. And he stopped Powell from raising rates. Well, that's not going to help. He's going to have to drop rates back to zero. He's going to have to do QE. And even then, that's not going to help. The biggest problem we have right now are the banks. The banks are lagging. They're not the leadership. You always got to have the banks leading. And with the banks trailing the market, just like what happened in October, the reason the market cracked in October 5th and fell 20% because the banks, again, were not leading. Just like now, not leading. So we're going to get a rally. They're going to give us some fake narratives, more China noise, more rate cut noise, more of this best economy ever. But guess what? The bond market is telling us something totally different, and that's why we've had yesterday the worst volume day in a year. Because the big institutions that make the stock market go up are saying, you're all full of crap. You guys on TV, you're full of crap. Because, again, the bond market is never wrong. The bond market is saying, look, we just had not only are we getting the signals of an inversion. Remember the 3-month Treasury this week, you could buy a 3-month Treasury, a higher rate on a 3-month Treasury than you could on a 10-year Treasury. That's called an inversion. That shows you're going to be in a recession, or it also means we may be in a recession. It also tells you we could follow that up with a market crash. So right now, the big institutions are holding back. They're not putting money in this market. Everybody's sitting on the sidelines waiting to see what Trump's going to do. Is he going to do QE? In the meantime, you should be taking profits on any of the gains you have. Don't get out of the market completely, but take some profits, lay back in the weeds, and let's see what happens in the next couple of weeks, what he is going to announce. Because right now, the market is exhausted. I will see you on the charts.